Hey everybody, and welcome to Season 2 of the PayCLT Payments Hub podcast, sponsored by Endava. I'm your host, Scott Harkey, and this season we're going to be diving deeper into the lives of some of the local payment professionals here in Charlotte to learn about their journey into the payment space. We hope you'll join us.
Really excited today for our first PayCLT Payment Hub session in person.
Yeah.
All right. So Joe, thanks for being here.
Yeah, thank you for having me.
Yeah, absolutely.
Yeah.
So this series, we're really excited because we're learning about kind of our local payment leaders.
Yeah.
And you've got quite a history both here in Charlotte and just in general.
Yeah.
So why don't we start out by learning a little bit about you and tell us a little bit about what you do and kind of some of your background.
Yeah. Well, personally, I have a family. We live at Lake Norman. I've got 4 children, all doing really well. A beautiful wife, and we're just enjoying kind of semi-retirement. I sold my business back in November of 2023, Payzer, and I've been helping a few startups out here and there, and enjoying that. Helping them with advisory and payments, of course. And so I'm just really enjoying life right now. Yeah.
Awesome. Maybe if we go all the way back to the beginning,
Yeah.
What was your first job in payments?
Yeah.
How did you get into this space?
Well, I started right out of college with Mobil Oil, which, date myself, was 1985. It was a Fortune 3 company, the third largest company in the world at the time. They're now part of ExxonMobil. But I started in a tech job, which was a lot different than tech today. And I worked there a couple years, and I got my MBA at night in finance from George Washington, because back in the day we used to go at night, and it worked out well. I moved into I ran a very early data analytics function where we built the site selection modeling and performed data analytics for the rest of the organization. And that was cool. And then moved into finance and ran the numbers for a couple of years. And they said, "Hey, you're pretty good at tech." I said, "I really want to be a crude trader." And they're like, "No, you're pretty good at tech. Why don't you go work in the card group?" And I rolled out, really the first self-serve implementations of payments, which was called Pay at the Pump, where you stick your card, as we're all familiar, into the gas pump.
Yeah.
Those were really the first self-serve implementations of payments. And
this was for Mobil?
Mobil Oil, yeah. And so I didn't create that, but I just was responsible to roll it out and get 5,000 gas station dealers to buy into it and implement it. And I learned a lot, and I kept doing more in that area, and I took over we built our own point of sale at Mobil, because before gateways were really commonly available. So we had our own point of sale with direct connects to all of the various banks for debit. We had essentially our own debit card network, and obviously the credit card processing, and all to drive pay at the pump. And we were kind of a leader in payments, and because most of the transactions at the time were in gas stations.
Right.
And gas and grocery, right? QSR, fast food, was just kind of coming on. And that ultimately became it. But anyway, so I learned the payments business from the beginning, and then, it kept going. I took over the credit card itself and ran the private label credit cards, which were a big deal in the fuel industry, and the fleet credit cards. We were the first to have a relationship with WEX, which ultimately bought my company, Payzer. It all kind of full circle, back when WEX was a startup.
Right.
So I'm seeing all this happen, and they came to me and they put me in charge of all this, and they said, "We want you to figure out how to make Mobil the fastest place to buy gas in the world." And so we looked at all kinds of crazy things, but ultimately it came down to payment, because that's what we could execute. And so I created something called Speedpass, which was the first use of alias-based payments, tokenization, and radio frequency technology for contactless payment. And you would touch it, you'd hang it on your key ring, you touch it at the pump.
I had one of those little plastic dongles.
Little plastic dongles, and that was amazing. Texas Instruments did the core technology, and the pump company did a lot of the integration, but we built a system that really ran it. And it was really one of the very first, that was in 1996, one of the first fintech products. I mean, there was very little innovation for 20, 30 years prior to that in payments because the systems were so archaic.
Yeah.
And then just at that time, the internet was really starting to take hold. And
so let's pause there for a second because
Yeah.
I'm really curious about the
Yeah.
customer adoption side of that,
Yeah,
right? So
yeah.
you go through, cards at the pump, and you move
Yeah.
into contactless eventually, and
Yeah.
contactless had another, 10 years to get traction. But
Yeah.
even going back to the card side of things, how did you convince end consumers to use their card at the pump? Or is that what they wanted to do?
Yeah, no, great question. It wasn't easy. There's a small number of early adopters. Most people thought it was a stupid idea. So you go back to kind of what Steve Jobs ultimately said, which was, people, may not always know what they want, but so it's very tricky, looking at, market research for new products. But we knew they wanted speed and convenience, and we knew the experience of having to go in, go into the store and wait in line to give the guy in the Led Zeppelin T-shirt your credit card was a terrible experience, right?
Yeah.
And so we knew this was way better, right? And we knew people wanted convenience. And then we were rolling it out, and we had to work with the banks to we'd give dollar credits, $1 off if you'd use your card at the pump. And the banks, and Bank of America used to give folks $1 for using their debit card at the pump, and we would market that and more ways to pay. And it took 15 years to get people, because now it's 80, 90% more or plus, depending on the location, use cards at the pump.
Yeah, now they have the opposite problem, right? Gas stations can't get people into the actual store to buy that.
What happened? That's interesting because when we had to leave mobile, and the whole rollout was stopped thanks to a consulting company who I won't tell you about. I won't mention their name. Who said you're going to destroy the convenience store business if you roll this out? And we were kind of just following our customers. I was pretty young. I mean, I was 30 years old. I was like, oh, you might be right. I don't know, but it seems like everybody loves it. Why people are starting to love this? So we stopped and did a study for a year, and we found the exact opposite. The convenience store sales went up because it got all the fuel-only purchasers out of the store. So it increased the capacity of the store, and the convenience store sales went up. The fuel purchases went up. It was a home run.
Interesting.
So then we went back to rolling it out, but now everybody else had kind of caught up, and so we didn't get an advantage. So when we came out with SpeedPass, which was the RF product, we didn't make the same mistake. We rolled it out super fast. We got a big advantage, and it increased, I won't say how much, it increased market share substantially for mobile at the time, and was a real big win for us. But it took 15 years of marketing, and the fuel business is not a high margin business, so they didn't spend a ton on marketing. But we worked on our credit card. We had a big credit card holder base, and we worked on them first. But then when we got to SpeedPass, we had learned a lot, and we went fast. We marketed it. It was kind of started pre-internet, so there was no real email channel. It was, direct mail and follow-up phone calls. But
what was the proposition for SpeedPass?
For SpeedPass, it was, this is the fastest way to buy your gasoline. It was kind of hard to explain it, but when you went to the pump and you touched your thing and it was just on, I had a hot pump, so we took the risk of the authorization time, and we just turned the pump on instantly when you touched your. So it was instantaneous. It was something. The light, the Pegasus lit up, and it was like magic. It was like, oh my God, I don't have to read, because remember they had the little tiny green screen, 2-line. You had to read that, follow the prompts, answer questions. Kind of like you do today, which these ridiculous prompts they still have at the point of sale inside. All that was gone. It was just a light. It's on. It's good to go. For women, it was really beneficial because they didn't have to. I sat in a gas station and watched what people do when they bought gas before I created. And like women, especially, have the most steps because they have to find their purse. It's not always right near them in the car. So they have to find their purse, then find their wallet in their purse, then find the card in the wallet, then take it out, and then orient the card, with the mag straight up and to the left, right, which people get wrong all the time. And then they're outdoor readers, card readers, so they didn't work a lot of the time.
Right.
And so it was a terrible process, but it was way better than going inside. So this really fixed all that. And we grew to 6 million users in just a few years. So it really, people loved it.
What about fraud and all that? How did you think about that, or how did that factor?
The fraud was, so that's a great question. So we didn't have any fraud. Just like anything new, you have no fraud initially.
Yeah.
But we had, so there was different types of fraud, but we had, it's an alias-based payment mechanism. So your card was never, it's the first, the card, we got the benefit of having the card not in play.
Yep.
But, somebody, people lost, their tokens. And we prevented, duplication of them because we had tokenization. At the time, we used Texas Instruments to create what's called digital signature technology, and it would send through a randomly generated number, match it up on the other end, and
Yep.
if it was fraud, because they were easy to replicate. The actual number was in the clear. But that was back in the day. You have to understand. They had a journal tape in the back of the gas station, and all the transaction history was printed on the journal tape, including the full card number. So that's the environment we were in at the time. It was much less. It wasn't until the internet came that it created places to use all these fraudulent cards.
Yeah, well, I think, and the ability to scale it. Right?
Yeah,
I feel like fraud back then was a lot more. You would have to physically go to these individual, and how much can you really commit?
But we did have some fraud issues creep in, with lost and stolen, and we started building more sophisticated systems to track it, and we worked pretty closely with the card companies to monitor. They were quite interested in it, at the time, and they told us it was a terrible idea, but now 25 years later, they all have
to. They make a lot of money off of that.
Contactless payments, finally, but it was. It was a shame we couldn't bring it outside of mobile at the time. It's one of my great regrets. We tried a little bit, but we weren't able to really create a startup from inside of it, especially after we got acquired by Exxon, and it was a really big corporation. It just was a very difficult to create a startup from within a big corporation.
So what happened from there? You eventually ended up with one. So what happened from there?
So we got acquired by Exxon. I stayed for 4 or 5 years, but I really loved the payments business, and so I came to Charlotte to work for Bank of America to learn more about it. The world's biggest payments company at the time, Bank of America, they maybe still are, but
I think JP Morgan's
taking it over. Yeah, I'm sorry, Bank of America, but they're still big enough, I learned a lot about the payments. I got a first-class education in payments from a banking perspective, and it was a bit humbling, I got to tell you. But I learned a lot, and then I, met up with, while I was there, I met up with my co-founder, and we started talking about the contractor space, and then I ultimately quit after 5 years to start Payzer. And I worked there for 12 years and then just kind of have exited from that. But Payzer was interesting to me because, it's a big decision to leave the bank when you have 2 kids in college and 2 more that need to go through. Actually, 1 in college, 1 about to go. And I was 47 years old. That was a big decision. And I did it, though, because when there's a quantum leap change in technology, it creates huge opportunity. And we were about to have the change to LTE in 2012. It came in 2014-ish, roughly. But I knew that kind of a quantum leap, because there wasn't really a mobile internet for businesses. Like the internet via your mobile phone was not good enough to run a business off of. It wasn't robust enough. It wasn't fast enough. It wasn't reliable enough. But I knew with LTE, and so and these service businesses, contractors, so they didn't have internet cloud-based solutions even to 2012, because they couldn't use it where they worked, which was in your house, not in their office. And so I just said, and I looked at the size of the market, and it's not a very front and center market that folks think about, but it maybe not the sexiest, but it is big, and it's fragmented, lots of problems, which means opportunity.
Yeah.
And big market, no cloud-based solutions. I was like, we didn't miss the internet, and here's our chance to create cloud and mobile solutions for a huge business sector. And, lo and behold, 10 years later, they now call it field services management. And it's a big sector with many verticals, many sub-verticals to it. And it's really, really still a big opportunity.
Yeah, a couple things in that resonate. One, I also left Bank of America when I was 35, and I remember how hard a decision was because I had 3 kids.
Yeah,
two of mine were only 1 at the time. So,
right.
But it's always hard to step out of that. What feels, at least for me, felt like kind of security of a big company, big job. I don't know if it still feels that way these days, but certainly then it felt that way. You mentioned also when you were at Mobil that you wish you had been able to spin out that idea into something. So it sounds like you've had that kind of entrepreneurial spirit.
Yeah,
for a while.
We even tried for a few years actually, and it was a combination of difficulty of getting it outside of corporate, outside of corporate, and innovation within a corporate structure. It's really not the corporate structure; it's all the egos, quite frankly, of all the people that get in the way of innovation. It just becomes so hard to fight through, a million different opinions, and so you don't control your palate, and that's really the hardest thing. And so we tried, but we were unable to really pull it off. Yeah.
So you start Payzer, and then you have the opposite challenge of you could do anything. How do you decide what to do, and how do you kind of make that journey through finding the product market fit?
That's a great point. So to me, the process of building a company is a process of problem identification and prioritization and solving the right problems in the simplest, cheapest possible way possible. And all my training at Mobil, ExxonMobil, Bank of America, they train you great on everything you need to know to run a business. They don't train you though on the creative problem solving that it creates, that you need, to be a successful entrepreneur. So ultimately, it's about figuring out, there's 1,000 things that Exxon and Bank of America will tell you need to do to run a business, and you need to pick the 3 that matter today.
Right.
And you need to pick the right 3, because you'll run out of money if you don't work on the right things. And so that's what it's all about. And then finding the solutions are really the fun part and the easy part. It's really about finding the problems that matter, figuring out which ones matter, defining them properly, and then solving them quickly, and keep doing that every day, 15 hours a day when you start, and do that and do it and do it. And the faster you do that, the faster you grow. And then you can look up, and then people, you're able to attract investment, and then it really goes fast. But you got to keep doing the same thing. But then you got to build a process to run that feedback loop. To me, it's all about the feedback loop. It's about a lot of things. But if you run the feedback loop right, it focuses you on the right things, and you can get where you need to go.
How do you keep your kind of North Star of your own instinct as to what the right path is versus that feedback, right? Because to the earlier point, some of that feedback may be right or may be interesting, but may not be relevant to what you're ultimately trying to do.
Yeah, well, you do have to know where you're going, or you may never get there. So we started out as the all-in-one financial tool, and we stuck to that vision. All the payments and financing solutions all rolled into one place for a contractor, right at their finger, right at their, in their pocket, on their phone. And but we came up against another problem. So that was our focus. That's all we did. We didn't do anything else. I was kind of an ogre. I just said no a lot, to things. A rogue product person, as smart and creative as they may be, can change your whole business if you don't
Especially
watch.
In the early days.
They can change your business in a week. And so you have to be a bit of an ogre as you start, hiring folks. But then we found hey, we needed to protect, if we didn't have the software and workflow wrapped around it, we couldn't defend our space. So, we tried to do some deals with some folks, but they weren't open to very good deals, because they were in control, and things were evolving fast. And we realized these contractors need everything, so we just built it. And so we wound up we've essentially built two startups. And then we became, as I said, the all-in-one everything tool, for the contractors that we targeted. And you have to pick your target market, because if you don't pick your target market, it becomes impossible to satisfy your customers, because you have too many customers, too many different types of customers to satisfy. So you have to pick a homogeneous target market. That gives you something you can solve with the money that you're likely to get.
Right.
And so we just picked HVAC and plumbing contractors because honestly, the banks didn't want to work with other verticals in the contractor space at the time. And the businesses were fundamentally good. They were good, strong businesses, so they didn't mind paying us.
Right.
That always helped. So and they were big enough to matter, and so we focused on those segments, and we just, worked the feedback loop every day. And we built the software this way until we could defend our space and make those contractors happy. And that required a lot more money. I wouldn't recommend building two startups on your way there, but you do what you have to do. But then we kept our focus on that once we expanded our vision a bit, because we had to. As you know, if you run a payments business and you're not wrapped up in the workflow, you're dead. So unless you're Bank of America, or Wells Fargo.
Was there a particular point in that journey where you feel like, all right, I think we got this, right? Like, I don't know exactly how it's going to go or exactly what the outcome is going to be, but we're pretty locked in. We clearly got a good business model. We got it working.
When we first got funding and we were rolling out the all-in-one financial tool, it was great. And we were just signing. I mean, it was a pretty easy sell, and we were signing contractors up. And then it became obvious that we could lose all of that if we didn't build more software. And that was a kind of a sad day because the build for that product was so much larger than the payments product, and it required so much more money.
Yeah.
And so the day I raised money, the first round, I was right on to the next problem. It's like, how am I going to grow? How are we going to grow this fast enough to keep these investors happy? And so it's right on to the next problem. Then we started to feel good about things, and then we realized, oh shit, we need to build a lot more software. And then that was, that took a few years.
Yeah.
It was the hardest thing I've ever done, because that was a hard product to build and make it simple. It's very hard to do all the things they wanted in a simple way, and so it took a few years. But I would say when we got to, it was 7 or 8 years from the time we started before I felt like and I still felt like we could lose it, because then you start worrying about, when should we exit? Should we hold on and keep going? Because this is still a big market that's still underpenetrated. Should we just hang on and keep going? And that's a tough decision. But I got to the point where, I knew AI was coming. It's the next big tech change. And I was like, we're going to have to invest heavily to survive in this environment.
Yep.
And so I said, I need some help with this. I don't want to risk it all again. And so I got a little. Plus, I'm 60 years old. I didn't want to risk it all, everything at that point. So we got a great offer from a great company, and so we and I think it gives them the additional resources to do what they need to do to compete in the AI, era.
Yeah. Awesome. Well, it would be remiss to not say congratulations.
Oh,
obviously, a huge accomplishment. Fantastic exit, but also just in general, setting out to achieve something like that, going through all that, and ultimately coming out the other side and feeling really good about the outcome.
Yeah, when you look back on it, you realize you also have to be a little bit lucky.
Oh, for sure.
It's just, a lot can go wrong.
Yeah. I think I always view it as it's the combination, right? But fundamentally, you work hard to put yourself in the right place to where when the good luck happens, you benefit from it, right? Yeah. But you do need the luck to happen as well.
You do. But you're right. If you keep doing what you're supposed to do, finding the problems, solving them, you got to look for them. Some people don't want to look for them because it's awful when you find
it's hard work.
It's hard work, but you got to look for the problems, because the faster you find them, the faster you can fix them, and you can move forward. And if you don't do that, or if you don't define your target market well, and you never get to product market fit. I mean, those things are, and then if you don't, set up a great go-to-market, process and manage the crap out of that every single day, lead by lead for several years, you don't get this. So there's a lot of things you have to do, but if you keep doing the right things, eventually something good will happen. Yeah.
All right. So you have the exit, you transition into advising and kind of more mentorship stuff. Tell me a little bit about that stage of your journey.
Yeah. Well, I just kind of feel my way through it, but I didn't know what to do initially. We didn't do anything for 90 days. Then I just started.
Just 90 days? That was it?
Yeah.
That's all you gave yourself?
People were calling, people want to talk to me, and so I helped. I must have talked to 30 different entrepreneurs, and it was fun. It was like motivating and invigorating, because that's really what I love. I love the beginning of the journey. To me, it was the most stressful, but also the most fun. And
it's where the creativity thrives.
Yeah, it's
right. It's where you're not into process and operating, right?
Yeah.
You're still in the creative zone of like,
right.
How do we even look at this?
So I really like that. And then I just started talking to more people, and so now I'm kind of involved with a few companies. I might get involved with one in a much bigger way, but kind of feel my way through that. So, but I'm happy doing this. I'm helping folks with their, set up their payments properly and set it up so they can make some money and not take huge amounts of risk. and so I enjoy doing that. It's kind of tricky to do that. And, there's always the devil's in the details in that. But if you work through it, you can help them get to a good place. So I really have enjoyed that. And I'm probably going to get involved in a company here soon that in a bigger way, not as the CEO, but just as helping to share everything I've learned.
Well, what do you see as the big opportunity in the payment space? What are people not focused on that they should be, or where, even if maybe there is somebody, where do you see the biggest opportunity?
Well, I think still there's a lot of opportunity just in all of these verticals. Just building, integrating, really good payment, and if it makes sense, financing solutions into the various verticals. I still think there's a long way to go on that, but
do you think so on the banking side, the whole embedded finance and a version of banking as a service, there's the theory from some of the banks, especially smaller community banks, that they can go after that space. Do you think that's a space right for a bank, or is it?
I think it's the banking space has been ripe for decades for more and more innovation, and the banking as a service model to me is super exciting. The large banks have such control, and it's
so you got to crack through that.
You got to create value propositions that are so compelling that you can work, and they also have all the money. So it's a tough, banking is a tough one, but I think working around the periphery, there's lots of opportunities that are really big enough to matter. There's limitless, and I think it's really just down to the basics of, defining the target market, making sure it's big enough to matter, achieving product market fit, and, just grinding it out for many years. I mean, there's a lot of opportunities. I'm really interested in the real-time payments, innovation. I would love to see. I think it's hard because the value of a lot of the payment systems is the network. It's not that you can make the payment go instantly. Although that's quite valuable. I'm not saying it's not valuable, but you have to sort of crack the network somehow. And it'd be great if the networks could be opened up, so that entrepreneurs could access all of the endpoints through the networks, at a fair price, so that folks could create the innovations on the front end and ride through the networks to get to the endpoints. I think that would be great for payments innovation in our country. You know,
I wouldn't hold your breath for that one.
no, that one's not going to happen. But that would be.
But I do think that's where innovative
yeah.
banks can provide that on-ramp, right?
Yeah.
I mean, the banks are really committed to enabling that ecosystem, I think, and provide that access, both from a technical standpoint, but also from an economical standpoint.
Right. No, I agree. It moves slow, but that and it's hard, but that's what creates, the opportunities as well. So
I think the other challenge that certainly we see in real-time payments is there's still a bit of a search for the business case that really drives meaningful volume.
Yeah.
Right?
Yeah.
So it's not really in consumer, other than some very narrow use cases.
Yeah.
I think in corporate and kind of larger money movement scenarios, even in some B2B, they're same day ACH with 3 or 4 windows or however many it is now, like works fine, right?
Yeah, that's pretty good.
So there's not the evolution in the product yet to really drive the meaningful value add, and that's certainly slowing things down as well.
Yeah, I'm kind of interested in some of the split settlement, use cases where, a retailer takes where there are large payments, and so contracting is a great, example where the retailer or the contractor or whoever the retailer is takes a payment, but really half of it is owed to the manufacturer. Right. Split settlement implementations where you have a contract with the retailer to automatically pay the manufacturer.
Right.
Would be, that's where speed would really help because they're not getting paid for, depending on 50 days.
Yep.
And that would make a tremendous difference to those manufacturers. There are other verticals where
I think construction's another big one, right? Delivery of goods and all that sort of stuff.
Furniture, interior design, furniture. There are a lot of verticals where there's opportunities for speed like that.
Right.
And maybe real-time payments could play a role in that. But I agree that the same day ACH is pretty fast.
Yeah.
It's but ultimately, I think the world needs to go to real time.
Well, I think all of us practitioners trying to drive volume on real time payments and usage often go back to the enhanced messaging that exists in the real time system and the ability to carry data and other things. Which I 100% buy into, and I think that will ultimately drive that incremental value add. The problem is just it's not ubiquitous enough, right, to really drive it. So when you look in the ERPs that organizations are using, like they're not really leveraging it yet. Or you look at the full flow, they're not fully embedded yet to where you're able to actually utilize them. But I think direction of travel to me, that still remains to be the kind of the biggest space of opportunity.
And I've really, I'm more of a SaaS. People like to think of me as a payments guy. I'm a payments guy, but I'm more of a SaaS CEO now. I spent 10 years, running a SaaS company.
Just happened to be a payments company.
I honestly, I feel like I've kind of semi-pivoted to more of that focus, and that's really where a lot of my thinking has been the last 10 years. So I haven't been as close to. When I was at the bank, I saw everything. You knew everything going on. The last 10 years, I've been heads down, learning how to, implement a SaaS product efficiently and effectively, and it's a much different problem. The payments part, we had down in year one. And it was really the other 10 years was all of that.
So is there anybody, even with that context, is there anybody that stands out to you in the payments community or kind of the payments folklore that you've always wanted to have a conversation with, or that you have had a conversation with that really stood out to you?
Oh, I mean, there's, honestly, it's, so many people. It's the folks who are doing the work, I got to tell you, like the whole movement to, using credit cards to make payments, essentially bill payments, and, extracting the interchange and splitting it with the payer. I would have never thought that would have worked. If someone told me, that 10, 15 years ago that was going to be a big
businesses to use credit cards.
Like Mike Prager and, he's done an Avid Exchange. Like, I think that's amazing, and he was just focused on to me, he must have just been focused on the problems and solving the problems and came up with a solution. And I know a lot of other folks do that as well, but it is, I mean, what he's done is amazing. And, I think folks like yourself, I mean, your understanding of the payments industry.
I just pretend like it. I don't really know.
I'm really just an innovator. I run across a problem and I use my creativity to solve it. I don't have the breadth, of payments knowledge that I've just solved a series of problems that happen to work out.
I think you probably know a little more than you're giving some credit for, but I'll take the humbleness about it.
Yeah.
Well, maybe one last question, right? Like I said, this whole kind of series is about celebrating local leaders in Charlotte. What do you like about Charlotte? What's something about Charlotte that you've really grown to like? You stayed, so you must like it okay.
We love Charlotte. I mean, I lived in the Washington, Baltimore area my whole life and grew up in Northern Virginia. And it was a great place to live, but it got kind of crazy towards the end. And so, I came down here to work with Bank of America, but I also came down, to put my kids in a better ecosystem.
Yep.
And I love the growth of Charlotte and the energy of Charlotte and how clean and vibrant Charlotte is. And it's a great, great community, and love the city. I think the city is beautiful. Every time we drive by, look at the lights. I mean, we love it. And love how like South End and all the places along the rail and all the different little pockets of communities are being rebuilt and re-energized. And I just think it's a great place to live. And, it's a fair, cost of living, and the people are good. We just love it here. Wish the sports teams, the Hornets would learn how to work the ping pong balls a little better. But other than that, we're pretty happy. And it has all of the elements of a big city without a lot of the problems. Like our police chief, Johnny Jennings, coached his son in basketball. He's a great, great man. So, I like our city. Yeah.
Awesome. Well, thank you, Joe.
Yeah.
Thank you so much for the conversation.
Thank you.
It's been really great to talk to you.
Thank you.
Thank you all for joining us for this edition of the Payments Hub podcast. Talk to you next time.
Thank you.